Introduction. Hello everyone. In the last video, we learned about the classification of accounts and the rules of accounting, also known as the golden rules. Today, we are going to apply these rules practically while preparing journal entries. For each transaction, we will identify the accounts affected. Apply the correct accounting rule. Understand why one account is debited and the other is credited. Analyze the net effect of each transaction. This logical approach helps us avoid memorization and makes accounting simple and meaningful. Let's begin. Commenced business with cash 80,000 rupees. Journal entry. Cash account debit. To capital account. Accounts affected. Cash account an asset. Capital account owner's equity. Accounting rule applied. Cash real account debit what comes in. Capital personal account credit the giver. Net effect. Cash increases. Capital increases. Purchased goods for cash 5,000 rupees. Journal entry. Purchase account debit. To cash account. Accounts affected. Purchase account expense. Cash account asset. Accounting rule applied. Purchase nominal account rule debit all expenses and losses. Cash real account rule credit what goes out. Net effect. Expense increases. Cash decreases. Purchased furniture for 6,000 rupees. Journal entry. Furniture account debit. To cash account. Accounts affected. Furniture account asset. Cash account asset. Accounting rule applied. Furniture debit what comes in, real account rule. Cash credit what goes out, real account rule. Net effect. Furniture increases. Cash decreases. Sold goods for cash 4,000 rupees. Journal entry. Cash account debit. To sales account. Accounts affected. Cash account asset. Sales account income. Accounting rule applied. Cash debit what comes in, real account rule. Sales credit all incomes and gains, nominal account rule. Net effect. Cash increases. Income increases. Bought goods from Madhvan on credit 10,000 rupees. Journal entry. Purchase account debit. To Madhvan's account. Accounts affected. Purchase account expense. Madhvan's account personal account creditor. Accounting rule applied. Purchase debit all expenses and losses, nominal account rule. Madhvan credit the giver, personal account rule. Net effect. Expense increases. Liability increases. Sold goods for cash 2,000 rupees. Journal entry. Cash account debit. To sales account. Accounts affected. Cash account asset. Sales account income. Accounting rule applied. Cash debit what comes in, real account rule. Sales credit all incomes and gains, nominal account rule. Net effect. Cash increases. Income increases. Sold goods to Anil on credit 3,000 rupees. Journal entry. Anil's account Dr. To sales account. Accounts affected. Anil's account personal account debtor. Sales account income. Accounting rule applied. Anil debit the receiver personal account rule. Sales credit all incomes and gains, nominal account rule. Net effect. Debtor increases. Income increases. Paid Madhvan cash 5,000 rupees. Journal entry. Madhvan's account debit. To cash account. Accounts affected. Madhvan's account personal account. Cash account asset. Accounting rule applied. Madhvan debit the receiver personal account rule. Cash credit what goes out, real account rule. Net effect. Liability decreases. Cash decreases. Paid for stationery 200 rupees. Journal entry. Stationery account debit. To cash account. Accounts affected. Stationery account expense. Cash account asset. Accounting rule applied. Stationery debit all expenses and losses, nominal account rule. Cash credit what goes out, real account rule. Net effect. Expense increases. Cash decreases. Received cash from Anil 3,000 rupees. Journal entry. Cash account debit. To Anil's account. Accounts affected. Cash account asset. Anil's account personal account. Accounting rule applied. Cash debit what comes in real account rule. Anil credit the giver personal account rule. Net effect. Cash increases. Debtor decreases. Received commission 30 rupees. Journal entry. Cash account debit. To commission account. Accounts affected. Cash account asset. Commission account income. Accounting rule applied. Cash debit what comes in real account rule. Commission credit all incomes and gains nominal account rule. Net effect. Cash increases. Income increases. Paid salary to accountant 2000 rupees. Journal entry. Salary account debit. To cash account. Accounts affected. Salary account expense. Cash account asset. Accounting rule applied. Salary debit all expenses and losses nominal account rule. Cash credit what goes out real account rule. Net effect. Expense increases. Cash decreases. Paid rent to landlord 1500 rupees. Journal entry. Rent account debit. To cash account. Accounts affected. Rent account expense. Cash account asset. Accounting rule applied. Rent debit all expenses and losses nominal account rule. Cash credit what goes out real account rule. Net effect. Expense increases. Cash decreases. Conclusion. In today's video, we learned how the rules of accounting are applied practically while preparing journal entries. By clearly identifying the accounts affected, understanding whether an account increases or decreases, and then applying the correct rule, journal entries become logical and easy. This method helps us avoid rote memorization and builds a strong foundation in accounting. Once the logic of debit and credit is clear, journalizing transactions becomes simple and meaningful. In the next video, we will explain the same set of transactions using the modern rules of accounting. Thank you for watching and happy learning.